Hi everyone, and welcome to another FX Edge Power Hour. I am Marcello Ducil, and we're going to do today what I've done for years, what we've done together for quite some time now, which is an evaluation of the markets and appraisal of our strategies, which are based upon the 5 p.m. Eastern Standard Time close of our daily bars and our 4-hour bars, which we found in the in the broader scheme of things to give us a higher probability of success from a swing trading perspective. Today we're going to talk about 4 Forex tricks that money managers use in their trading. And then we're going to have a brief questions and answer session. Let's go ahead and get started here. After a losing streak, take a break, clear your mind, and start clean. One of the hardest things to do is to detach yourself from your trading and from your money. After a losing streak, money managers tend to stop and take a break to clear their minds from the stress of the losses. This is why money management is so important. It allows us to be able to try it again because losses are controlled. I think that's a very, very important point. It's important to, when you have a losing streak, to figure out why you're losing. Sometimes the market, let me tell you, there are actually multiple reasons why you can go through a losing streak. One, it can be that you have the wrong mindset. Okay, it's always going to come down to two things. Really, it's going to come down to your strategy, or it's going to come down to your implementation of that strategy. And what generally happens is that some people, sometimes your implementation can be off point, meaning that your interpretation of the data, especially if you're a manual or a discretionary trader, may very well be somehow needs a reset, if you will. Okay, somehow it has been modified in some way, and you need to go back to the basics, okay? Because what happens is we're learners. Over time, we evolve, we learn, we grow. That's who we are. That's what we do. But the thing about growing, learning, is that in that process, as you begin to trade, every trade begins to change you slightly. So that's why it's important. Actually, a trading plan is very, very important. You've got to write down the the things that make you very effective as a trader. Okay, write them down, keep them clear, and when you get off track, you can always go back to that, and that can be used as an anchor to remind you of what's most important. And so that's what's necessary. If you're manual or discretionarily trading, you need to have some form of a anchor there, and that's going to be your trade plan. But you have to stop, take a look at that, reset. The other reason that some people can suffer losses is because during that particular season, the market just isn't reacting very well to your strategy. And we have seen that from time to time. For instance, back in March we had we had our IBO suffered several losses. That was our time period of drawdown for the IBO. And, it was just for that season that it went through that. And so what happens is, guys, is number one, we made an adaptation. We made the system a little bit better. But number two is, and it's more than made up for those losses, and actually has gone forward to just plow ahead and make some decent profits. But the bottom line is that there's sometimes you're going to go through seasons where the market shifts, and maybe that strategy is not working for that 2-week time period or 3-week time period as well as it usually does. Doesn't mean your strategy goes kaput, that's no good any longer. It means that the market is going through a season where that thing is not working as well. So what's good? It's good to take a break, stop trading, okay? Reassess your implementation. If you've got automation that's doing it for you, so you know it's flawless implementation, but you're still having an issue, then take a look at the strategy. If the strategy is not broken, but during this particular season it's just not working well, then take a little bit of time off. Figure out what you can do better without trading it. And that's what a lot of money managers do, and that's what I recommend for people, because the capital that you preserve is the capital that will help you grow in the future. And that's probably the most important part of this entire game, is to maintain your capital until that time is right, okay? Until the time is right or the harvest is right for picking. Okay, Another one, diversification is overrated. Focus your efforts on only a few peers, time frames, and systems. Everyone's always talking about great diversification, diversifying, diversifying, diversifying. The word diversification itself means to allocate your capital into several investments to reduce risk. The reality of the matter is that for most traders, this ends up being counterproductive. Successful Forex traders and money managers focus their efforts on what they are good at and have provided them with the best results in the past. Remember to always apply the KISS principle, that is, keep it smooth and simple. Yeah, I like that. Keep it smooth and simple. Yeah, and you guys know that I subscribe to this substantially in my own trading. That is my trading style. I'm all about keeping it simple. And the reason that I am all about keeping it simple is that I know that when I traded 5 million things, that it was not effective for me as a trader. I did not I did not have the same kind of success that I have been able to maintain consistently here with these strategies and what we're doing. So I like to, besides the STPs, which are, you know, slower moving, I can focus on them more easily. I generally like to, you know, stay with the currency pairs that work the best. Now, having said that, you know, you want to also make sure that you use proper risk management when you do that. You know, people don't understand diversification doesn't necessarily mean diversification of a vehicle, investment vehicle. You know, for us, what we can have is, you know, you can have an IBO and you can have an STP. They work off two different principles, two different dynamics in the market, and you can have them both going at the same time, and, you know, one hits the mark, the other one doesn't. One goes in one direction, the other one doesn't, in the opposite direction. And so that is still a way of diversification, but what we really want to do, guys, is we want to focus our energies on what's most important. You know, what makes us the most money, what we're good at. You know, whatever is going to bring in the money, that's what you need to stick with, and that's the bottom line. So keep it simple, keep it smooth and simple. I like that. It's better than keeping it simple, stupid. Keep it smooth and simple. I like that. That's what we want to do, you know, in our trading, and that's what money managers will do. They will focus in on what they're very, very good at, and they'll trade that. Now you'll hear about people doing very complicated things, and yes, there are some outfits out there that do that, but many more are kind of having my approach to trading, which is focusing on what they're very good at. Okay. Find your risk comfort zone. Respect it and don't get out of it. Getting out of your risk comfort zone can be as dangerous as not using stop losses. Your risk comfort zone is defined by the amount of risk that you are comfortable taking. It might take you a few months to truly discover your personal risk comfort zone. However, as soon as you discover it, you should respect and by no means get out of it. Okay, what does that mean? What I mean is, you know, figure out what works for you. Some guys like to trade all my stuff at 5%. They run 3 things at 5% each, so they could potentially have 15% risk at any given time. Those are the guys that go out there and probably in the last month collected about 150, 200% on their trades. But the bottom line is there's a lot of risk attributed to that. You don't want to have 15% potential risk at any given time. You got to figure out what works for you, because the average guy, he's thinking, yeah, I want big profits. You know, I like this 5% thing where I can make 100% when the market really moves. Well, yeah, it sounds good in theory until you start taking losses. And so it's up to your risk tolerance. What can you handle? Because if you can't handle it, if you count the profits, the potential profits, and you don't count the risk, what's going to happen is that you're going to get in a situation where you're taking trades, okay, and price starts to move against you, doesn't even hit your stop loss, and you take the trade off before it's time. Why are you taking the trade off? You're taking it off because you're scared, you're uncomfortable, you can't manage that risk. It's too much risk for you. Okay? So you've got to know what your risk tolerance is completely. Very, very important thing. So every trade you take, you're able to sleep at night, you're able to do your job, and most importantly, you're able to implement the strategy, your trading plan to the T. Okay, learn how to incorporate your discretionary trading skills into your trading strategy. This can be very tricky. I talk about this all the time. This can be tricky for, since most traders have a hard time understanding the difference between discretionary trading and taking unnecessary trades, or really over trading or letting their emotions get in the way. The best idea would be to only use your discretionary trading if you see anything that might compromise your trade, such as price reaching a major area of support and resistance. Now, this is hybrid trading. This is what we call hybrid trading. What that means is that we allow the robots to take the trades for us. That way we prevent ourselves from over trading. And then on top of it, what we do is when we let the robot run until we see very clear-cut, what we would call no-brainer areas to take profit. I'm a part of or I formed a trading group, if you will, recently, and what we're doing is we're taking live trades in the market. And I see this all the time. I see creating opportunities that don't really exist all the time, and I see potential for over trading. There's always that potentiality. So what happens is that, it's easier if you have the robot take the trades for you. That way you don't try to make scenarios that don't exist because you want to take a trade, you feel like you have to take a trade because you haven't, that sort of thing. That's what you want to avoid by having the robot probably take the trade for you. But when there is an opportunity, when you see clear cut, hey man, this thing is going to turn around and it's time for a turnaround and you feel it, then you may want to take some of that profit off the table. Some of the things that we have talked about in the past, taking profit off the table at certain points, moving our stop to break even, something like that. That is what we call hybridized trading, and that is what absolutely is implemented by money managers all across the world. Okay. Closing notes, trading Forex is a constant learning experience, and the more you can learn and sharpen your skills, the better you will be as a trader. Okay?